Welcome to another Straight Up Tuesday tip. I'm 𝗤𝗏𝗀𝗀. With me as always is Mark Ainley. And with us again, Josh Steigelmann. Josh, welcome back to the show.
Thanks, guys. Thanks for having me back.
I'm pumped to see you. We're closing one tomorrow, using you guys for some builder's risk.
Yeah, it's been awesome being able to have a good partnership with you guys.
Yeah. All right, so we've gotten a lot of questions on insurance. A lot of investors, whether it be calling us directly or on the Facebook groups, hey, my premium's up 20%, 50%, 100%, or I'm going through inspections and my insurance company is hitting me up for XYZ, which they haven't done the last 3 or 4 years when they did these annual inspections. Can you give us just the state of the market? Like, why are rates so high? Why does everyone seem to be tightening back? Just give us that macro level, then we can dive into State Farm specifically.
Yeah, so in a nutshell, claim activity and cost per claim is a lot higher than it was 2 years ago. You had a lot of issues when COVID hit with the rise of lumber, and we did see a decrease on that, but we're seeing much more frequent claims come in where the natural disasters from wind, hail type of damages are coming in way more frequently. But then on top of that, you're finding a lot more underlying issues when they're going into those claims. So, you're finding, hey, we got this roof damage, and then lo and behold, it's not just the roof, it's the trusses, it's the stuff underneath. And so when you have all of that combined, insurance companies, unfortunately, they turn around and they want to make money at the end of the day, but they got to turn around and dump that losses back onto the whole as a rising tide, basically.
Got it. I mean, when you say it like that, it makes logical sense. If lumber and materials are 2x what they used to be,
yeah,
you guys are the ones paying for it,
right? At the end of the day, X plus Y equals Z. Like, if there's so much money that's going out, they want to have more money coming in to pay for what's going out. So, but in companies right now, you have a lot of companies that their ratio is absolute horrible, and they are really trying their best to not raise rates, but it's hitting hard right now in the market.
Now, is that because those companies had particular coverage in certain parts of the United States that might have been more prone to disasters, or are they have the same exposure as you guys have had?
I mean, there is a mix of that for sure, depending on where it's at in the country. I know right now, Illinois, just as a whole, is up in claim activity as well. I mean, most people think, oh man, Florida got hit really hard with some bad hurricanes. That's why my rate went up. Well, Illinois has had a lot of claims. Like, the claim activity on Illinois compared to just 2 years ago, it's up over 50% from what it was just compared to 2 years ago. So, I mean, one of the upsides to COVID was there's a big lull in homeowners claims because everyone was home. If there was a little spot that showed up on the ceiling, you noticed it because you were driving yourself crazy while you were cooped up in your house, and you went and fixed it. It didn't become this big claim. But now a lot of people are back out of their houses as well, and it's turning into a lot more claim frequency because of that, even in the more minor claims. But on top of that, you have a lot more weather-related claims here in Illinois that are directly affecting Illinois costs.
Why do insurance companies not have a waiver that prevents hail damage? Because I feel like that's such an extortion side of the business that ultimately you guys, maybe not State Farm, but the insurance industry as a whole pays for, and then turns around, and then you hear about one guy, he's like, I got my roof, I had some hail, and then I told my 6 neighbors, and we all got our whole cul-de-sac got our roof.
They'll go canvas it then, right?
Yeah,
That's their job.
I literally got an email from a roofing company the other day that said, hey, these storms went through, you should probably have hail damage. Like, why is there not a stop to that? Or is there anything that's ever happening with that?
Well, insurance companies have gotten smart we call them storm chasers, guys who just, they'll canvass a neighborhood and say, hey, we can get you a whole new roof. And we always warn our customers, watch out for storm chasers, because they just want you to sign on the dotted line. They do not care if you get a roof or not. They just want you to sign on the dotted line. And if you don't get a roof, they're still going to send you a bill for the work that they had to do to try to get you a roof. So they get paid either way. So we always recommend, if somebody's pounding on your door, tell them thanks, and then go find a reputable contractor that you know, or reach out to your insurance agent. Ask them, they know contractors. But storm chasers will come in and say, yeah, we can get you a new roof. And then lo and behold, they go up there and there's not damage. Well, it's because, again, the storm chaser just wanted you to sign on the dotted line. They didn't care about whether you actually had damage or not. They just wanted to get paid.
Yeah. So going back to just pricing, if we're underwriting for next year, the year after, are we going to continue to see these increases, or do you think it'll kind of flatten off where what I'm paying today will be roughly what I'm going to pay 2025, 2026? Or do we see more spikes coming?
I see more spikes, but I see them being more gradual. So this last, 2023, 2024, we saw some pretty big hits across the market, and companies have done a lot of adjusting. Insurance companies like to think in the 5 to 10 year time frame at a minimum. They really like to project out their numbers because they want to be here in 15, 20, 30 years. They don't want to just be in business for another 5 years. But we are seeing some of the claim frequency get a little bit more hedged off, but we definitely, I would still anticipate seeing your rates go up a little bit more, but I wouldn't say drastic spikes, not like the 20, 30, 40% that we've been seeing.
At what point do you advise people to get other quotes or check out other options? Is there a certain percentage? Like if it's gone up, like maybe you expect 10%, but if it goes above 10%?
I mean, it depends on the person, but I'm an advocate for getting quotes all the time. I mean, you can get them at renewal, but it depends on where you go. Some companies make it real easy to get quotes. Others, they make it a little bit more of a hassle. But when I have customers calling me saying, hey, my rate went up, $5, okay, well, that's not really a change. But when you see that 20% change, okay, maybe go get another quote somewhere and see what you can do. But it just depends on the situation.
Got it. Good stuff. Specifically at State Farm, what's on the horizon for you guys? Like, how have you guys been weathering? How are you guys just been doing as a company?
How do you hedge all of everything that the other companies are going through?
Well, one of the nice things with State Farm is we are a mutual company, meaning we don't have stockholders. So we don't have to go show a profit all the time. So for instance, last year, State Farm as a company lost $15 billion. And we are able to absorb a lot of that because of the fact that our stockholders are our customers. So you guys being customers are the ones who get to receive the dividends when we have profits, but we also are able to not have to worry about, well, our stock ticker price is going to go down, so we're going to have a runoff or sell off of our pricing. Whereas a lot of other companies out on the market, they do have stockholders they got to appease. They have to take immediate sharp action, which is why you'll see a lot of other companies. If you go look out there in their price increases, a lot of other companies are having drastic changes where we've been able to hold off on a lot of ours and have it be a more gradual increase rather than a sharp, here's a 40% jump on your rate.
Yeah, I can attest to this. Like, just to throw it out there, I've probably moved 6 or 7 buildings over to you guys now, right? Like, I got hit with a big ass renewal and said, Josh, what can you do here? And it was better, right? And
yeah.
Started moving more and more. So just personal attestment that, yes, like that you guys have been super competitive.
Yeah.
So cool. Anything else you want to wrap?
Yeah, that's wrap.
Let's do it. I pull out my Chicago fact here. Who are we playing for?
All right. So obviously today's sponsor is Josh at State Farm. We're playing for Zoe Clusters, who purchased up on the Straight Up Chicago merch store.
No peeking. All right. So State Farm is obviously located in Bloomington. It's founded by a Bloomington native. He saw the insurance rates. They were overcharging farmers as they were bundling the risk with the much riskier city dwellers in their fancy cars. So who is that man that founded State Farm? And I think hopefully Josh can help you out here because I think it's pure guessing. Is it George Maherl, Sears Roebuck, Joseph Lewis, Leo Goodwin?
You wanted to phone a fender, or are you going to get it on your own?
Well, I'll guess. I'll say a good one.
Okay.
It's Maherl.
Maherl.
Yeah, there you go.
J.G. Maherl.
I only chose that because I wasn't sure how to enunciate it.
I did not know Sears Roebuck, founder of Allstate. I did not know that.
Yeah.
I'm doing my little research here. So.
And WLS, world's largest store, is Sears.
Yes, I knew that one.
So
look at us. Just providing a ton of knowledge to our listeners.
Awesome. All right, Josh, thanks for coming on again. Thanks for being part of Build Your Team. Tom, thank you as always. Listeners, head over to Build Your Team at straightupchicagoinvestor.com, whether it be insurance or a lender, commercial, or if you have any other need or your real estate investment team, we got someone that can help you in that work. So thank you, Josh. Thank you, Tom. Listeners, we'll see you next week.
Thanks, guys.
Thanks all.